The idea of retirement, especially at an early age, can seem scary for investors. And investors can find themselves asking questions like, what investment vehicle should I go with? And how much money will I even have at the time of retirement? Now, the good news is there's high quality exchange traded funds or ETFs in the market that allow everyday investors to invest in a diversified basket of stocks and allow their retirement to grow on almost autopilot. In this video, we are going to go over why the Vanguard S&P 500 ETF, or ticker symbol VOO, might be the best ETF a long-term investor could buy into, and exactly what this ETF has to offer. Now, we're going to go through all this and more right after you please drop a like in this video and subscribe for more future content like this. So the Vanguard S&P 500 ETF, known as VOO, is a popular ETF that aims to track the performance of the S&P 500 index. It's managed by Vanguard, one of the world's largest investment management companies and one of the most respected. Now, the S&P 500 index is a widely followed benchmark index that includes 500 of the largest publicly traded companies in the US. These companies span various sectors and are selected based on their market capitalization, liquidity, and other criteria as well. The index is designed to represent the overall performance of the US stock markets. The VOO ETF works by investing in a portfolio of stocks that mirrors the composition of the S&P 500. The fund aims to provide investors with exposure to a diversified range of large-cap US companies, covering sectors such as technology, healthcare, finance, consumer goods, and others. As an ETF, VOO trades on the stock exchange and can be bought and sold throughout the trading day, just like any other ETF or stock. Now, VOO offers things like diversification, flexibility, and is relatively low cost compared to actively managed funds. Now, the Vanguard S&P 500 ETF was started around 2010, and as far as ETF price is up 279.52% as of all time. So it's pretty obvious that this ETF is no stranger to capital appreciation. That is some massive capital appreciation in just over 10 years. Now, VOO's expense ratio is just 0.03%, which is one of the cheapest expense ratios across the board compared to most all other ETFs. And keep in mind, if an investor is using this as a vehicle for retirement, they're going to hopefully acquire many shares of VOO, which means that over time, a big expense ratio can definitely add up. So the 0.03% expense ratio is definitely something great that VOO offers. Now, this ETF has a massive amount of assets under management, $303.86 billion. Now, just to put things into perspective, a very popular ETF like SCHD has only $46.03 billion in assets under management. VOO also offers a quarterly paid dividend, which we're going to go over here in a second, and is currently trading pretty close to the 52-week range high. Now, since VOO tracks the S&P 500, the ETF holdings are going to be heavily diversified. We have technology at 26%, healthcare at 14%, financials at 12%, consumer cyclical at 10%, communication at 8%, industrials at 8%, consumer defensive at 7%, energy at 4%, utilities at 2%, real estate at 2%, and basic materials at 2%. And VOO's top 10 holdings are companies like Apple, Microsoft, Amazon, Nvidia, Alphabet, Berkshire Hathaway, Alphabet, Meta, Exxon, and United Health Group. So as of so far at least, this ETF has some massive capital appreciation, has a super cheap expense ratio, and also seem to have a very diversified basket of stocks, with the top 10 holdings being about just as bulletproof as they come. Now, since VOO tracks the S&P, it does actually have a dividend, with a trailing 12-month dividend yield of just 1.54%. The dividend is most likely going to be a cherry on top for investors that buy into VOO, because the yield isn't going to generate any significant income unless an investor was to invest a significant amount of money at the start. With some pretty significant dividend growth over the past 10 or so years, dividend investors are actually getting paid more and more the longer they hold on to VOO, at least historically. Now, that brings us into the VOO's dividend growth rate. And over the last 10 years, VOO has had a 8.88% dividend growth rate. The last 5 years, 6.18%, and the last 3 years, just 2.8%. So although VOO has been growing their dividend consistently for the most part since inception, it's definitely not the fastest fund out there to grow their dividend. But again, this ETF does offer other things like massive amounts of potential capital appreciation that investors are going to be more than happy with in the future. But just for fun, in theory, if we could assume an annual dividend growth rate of 8.7%, which means the dividend would double every 8.3 years, VOO just 5 years down the road could be paying around $9.81 per year in dividends, which is much different than the previous around $6 per year in dividends. And in theory, 10 years from now, VOO could be paying $14.88. Again, this is just assuming an 8.7% annual dividend growth rate, which is sort of unlikely, but it's still fun for investors to dream about and to see what the dividend could be in the future. Now, another very impressive aspect to the Vanguard S&P 500 ETF is the total return on multiple time frames. This ETF has beat most all other ETFs across the entire market. And if we were to compare VOO to DGRO, to SPY, to JEPI, and even to Q yield, and go off a total return which is dividends included, on the last year, VOO's returned 5.67%. DGRO just under 1%, SPY just over 4%. JEPI's over 5%, and Q yield actually winning in the last year at 10.74%. But over the last 3 years, VOO is number 1 at 40.46%. SPY is number 2 at 40.05%. JEPI is actually number 3 at 39.88%. DGRO is number 4 at 33.78%. And QYLD is last at 23.06%. Over the last 5 years, it's almost not even close for most of the comparables. VOO is up almost 70% as far as total return in the last 5 years, and SPY is right behind it at 69.12%. Then behind that is DGRO at 61.85%. So on multiple different time frames, you can see that as time goes on, VOO is pretty much beating out almost all the competition, just to name a few. So it's important to note that even though the Vanguard S&P 500 ETF doesn't have the largest starting dividend yield, for example, the capital appreciation is likely going to catch up as long as the S&P and the general market move along in an upward direction. So there we have it. Overall, investing into an ETF like VOO, investors can gain a broad exposure to the US stock market and participate in its overall performance. However, during downturns, something like VOO is definitely going to be implicated in some volatility because it does track companies that do have a little bit higher beta. But even with that, I still think that VOO is still one of the best options for a younger investor looking to hold on to a long-term ETF till retirement. Which brings us into the dividend calculator. Let's see exactly how much a $10,000 position with $1,000 invested every month after that would give a young investor when it comes to the age of retirement. So if we were to plug in $10,000 as a starting principal, 1.54% initial annual dividend yield, 8.8% of dividend growth, which was a 10-year dividend growth rate, $12,000 for annual contribution. And then we have an expected share price of 3% and 30 years invested. Let's see what we get. So just 5 years of investing, this investor would have $63,000 worth of VOO with over $1,200 of annual dividends already. 10 years in, this investor was just adding in $1,000 per month and starting with $10,000 and reinvesting all the dividends back into more VOO. In 10 years, this investor in theory would have $146,000 worth of VOO and over $3,700 a year in dividends. Year number 15, this investor would have over $250,000 and over $8,600 a year in dividends. By year number 20, this investor would have $416,000 and $18,000 in dividends. And by year number 30, if this investor was, let's say, 20 years old and they just stuck with this for 30 years, by year number 30, this investor would officially be a millionaire in theory, with over $82,000 a year in dividends. So there we have it. There's the Vanguard S&P 500 ETF. Comment down below if you're a fan of the VOO ETF or what ETF you think is best for a young long-term investor to stick with until retirement. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.